Hi everyone, welcome back to Make Money Online. Today, we'll look at the top 10 reasons why Nio stock can make you rich in 2021. Make sure you stick around till the end of this video for the amazing secrets as to why Nio stock is the real deal for investment in 2021. Have you been in doubt for a very long time on what to invest in for 2021? Worry no more, because Nio stock has got your back. In this video, we'll expose the reasons why you need to invest in Nio stock for 2021. Number 1. Nio's business model. Nio, a Chinese car company that designs and produces premium electric vehicles, has seen its stock increase practically twofold year to date. Nio's revenues have developed from around 720 million in 2018 to about 1.12 billion in 2019. As its vehicle deliveries develop from approximately 11,300 units to around 20,600 units. Deals are expected to grow by 65%, driven by reliable values of the organization's ES6 5-seater electric SUV and the dispatch of the more modest EC6 SUV, which will be delivered soon. Number 2. How Nio makes money. In a minute, we'll examine Nio's plan of action, followed by segments that survey past execution and 2020 and 2021 goals for the organization's income generators, and serious correlations with Tesla. Nio reported about 1.12 billion in total revenues for the entire year of 2019. This incorporates two working parts. Automotive, 1.06 billion in 2019, which is 94% of total revenues. Sales of the company's electric vehicles, which now incorporate the Nio ES8, an excellent SUV accessible in 6 or 7-seater setups, and Nio ES6, a 5-seater SUV. And other, $66 million or 6% of total revenues. This portion incorporates income from the organization's administration bundles for its EVs and its energy arrangements, including charging and battery trading. Nio's automotive segment has been expanding rapidly. These were the segmented forms of Nio's automobiles and their developmental success. Sales from the automotive section have expanded by half, from $706 million in 2018, the year the organization dispatched its vehicles, to $1.06 billion in 2019. This was largely due to higher deliveries, which rose from 11.3 thousand in 2018 to about 20.6 thousand in 2019. In any case, the average cost declined from $62,000 to about $52,000. Driven by a higher blend of ES6 SUVs which have a lower value point compared to the lead ES8 SUV. We anticipate that income should develop to 1.78 billion in 2020, as deliveries increase by over 70% to 35,000 units, driven by higher take-up of the ES6 and the dispatch of the more conservative EC6, with the income coming closer to 2.75 billion in 2021. The Chinese car market has recuperated well after the COVID-19 related interruption recently, and Nio showed that it saw a month-to-month delivery record of 3,436 vehicles in May of 2020. Number 3. Nio's other segments are not doing bad as well. Other deals have developed from 14.4 million in 2018 to $66 million in 2019. We anticipate that the measurement should grow to about $105 million in 2020 and $152 million in 2021, driven by a higher base of vehicles in service, which should help increase administration bundles and energy deals. Number 4. Some recent updates on Nio stock are really sleek. Towards the beginning of July, Nio distributed its second quarter delivery report, showing that it delivered 10,331 vehicles, denoting an expansion of 191% year-over-year and about 169% successively. The company has profited by repressed interest post the COVID-19 related lockdowns, and its all-out deliveries for the primary portions of the year presently remain at 14,169 vehicles. A week ago, the company gave more subtleties on its EC6 hybrid SUV, noticing that it would be valued at about $53,000 before upgrades. The vehicle, a car-style rendition of the ES6 average-sized SUV, will begin deliveries this September. Notwithstanding, it will be interesting to see how it fares when Tesla dispatches the Model Y minimal SUV in China in mid-2021. While the price of the Chinese-made Model Y isn't known at this point, we believe it will almost certainly undermine the EC6. For example, the Model 3 vehicle sells for about $41,000 before upgrades in China, and the Model Y in the US costs about $4,000 more than the Model 3, demonstrating that a cost of under $50,000 for the base model is very likely. Nio likewise made sure to acknowledge lines for 6 Chinese banks for a sum of about $1.5 billion this month. This is a definite advancement for the organization, considering that it started 2020 with a dubiously low money position. From that point forward, the organization raised over $1 billion from Chinese government offices, while likewise observing some capital imbuement from early financial specialist Tencent Holdings. With the new credit lines, the organization ought to have sufficient liquidity to execute its arrangements and dispatch new models. Number 5. Outrageous increment in Nio's percentage income. Parts of Nio jumped over 15% throughout the last 2 exchanging days, driven somewhat by a positive report from Deutsche Bank, which raised income and profit gauges and communicated good faith encompassing the organization's innovation and brand acknowledgement in China. Aside from this, there could be another consideration driving the interest in Nio stock. Electric vehicle stocks have been popular this year. However, there are no feasible approaches to play the space. EV bellwether Tesla looks excellent. However, it's considered a luxury, with its stock rising practically 5 times year-to-date, with a market cap of $400 billion. Then again, electric truck startup Nikola has experienced harsh criticism for deceiving speculators about its innovation and capacities, and is currently the subject of examinations by the U.S. Division of Justice and the SEC. Speculators could remain uninvolved until the organization actually delivers a product. Nio, which exchanges at a generally sensible 7.5 times Agreement 2021 incomes, seems like a good pick for financial specialists who need to play the EV space without overpaying or wagering on complex organizations. Nio's revenue will probably develop by over 90% in 2020 and by about 70% in 2021. Number 6. The stock cost keeps rising for Nio. The stock cost for Nio rose by 19% on Tuesday. The stock is up by about half throughout the most recent month alone. Several components drive the ongoing additions. UBS investigators overhauled the store right off the bat, raising their value target significantly from around $1 per offer to $16. Furthermore, the organization likewise demonstrated that it plans to enter new business sectors, starting with Europe, beginning from the second half of 2021. Nio additionally dispatched another battery as an assistance offering, which decreases the upfront expense of a vehicle by selling the EV without a battery and making clients pay for batteries month to month, generally about $140 every month, much like they would pay for gas. Clients can trade out drained batteries for completely charged ones within a couple of moments across 143 battery trade stations in China's 64 urban communities. Nio stock is up by over 4.5 times this year. How does its valuation contrast with other EV makers? Is it exaggerated? Presently, Nio's $21 billion market cap suggests exchanging at about 6 times projected 2021 incomes of approximately $3.6 billion. In an examination, Tesla is valued at $375 billion, or about 7 times projected 2021 revenue of about $41 billion. Nikola, an electric truck startup, is valued at $15 billion. Taking a gander at the relative valuation, Nio appears to be reasonably evaluated considering its more grounded relative term development possibilities. Number 7. 26% pop-up in October. Nio stock flew on October 14th, up 26% because of a bullish report from JP Morgan. As per Barron's, expert Nick Lai redesignated Nio stock from hold to buy with a value focus of $40, almost twice where the stock exchanged before Lai's buy proposal. Nio is expected to be a victory in the superior space. Lai anticipates that the EVs should control 20% of the Chinese vehicle market in 2025, up from under 5% now, determined by an adjustment in shopper inclinations and a decrease in EV costs as battery costs fall, as per Business Insider. Nio's share value rise has outperformed Tesla in 2020. As of October 14th, Nio stock had risen 612%, well in front of Tesla's 375%. Nio's valuation at 24.4 immeasurably surpasses that of Tesla, 17.1. Number 8. Nio's Soaring Sales. Nio's quarterly and month-to-month deals are establishing precedents. As per Clean Technica, Nio delivered 4,708 vehicles in September, up 113% from the prior year. In the second from last quarter, its deliveries increased 154% to 12,206. And the initial 9 months of 2020 have dramatically increased to 26,375. Nio separates itself from contenders by empowering customers to trade exhausted batteries for new completely charged ones at 143 computerized battery trading stations situated in 64 urban areas. This so-called battery-as-a-help model enables drivers to get the most recent battery model and to save time they would have spent at a charging station, since the time it takes to trade batteries is about equivalent to filling up the gas tank of a traditional gas or diesel-fueled vehicle, as indicated by Clean Technica. Number 9. Nio's expectation-beating results. Nio's most recent outcomes were satisfying to speculators. As indicated by Reuters, on August 11th, Nio reported that its second quarter income dramatically increased to 3.72 billion, 220 million yuan more than anticipated. Nio expects income between 4.05 billion yuan and 4.21 billion yuan, which is around $606.68 million, for the third quarter, well in front of Refinitive's projection of 3.53 billion yuan. President William Bin Lai stated, "The current requirements on production will be lifted sooner rather than later, and we're sure that our production limit can fulfill the quickened need of our models," as indicated by Reuters. Number 10. Nio's high-quality vehicles. Nio's vehicles are of generally high caliber, beating Tesla. As indicated by JD Force, Nio positions highest among all brands in the battery electric vehicle segment, with 109 issues referred to per 100 vehicles, trailed by Tesla's 113 and ORA's 129. Nio's ES6 positioned the most noteworthy in the average size BEV portion, as indicated by JD Force. Nio dominates in the design and can improve in assembling. In what way? Both homegrown and overseas businesses, for example Nio and Tesla, are more remarkable in their outer design, human-machine communication, and innovation advancement, while joint endeavor brands outperform others in assembling methods, said Eileen Ren, VP of NEV arrangements at JD Force China. Nio is also advancing with regards to self-driving innovation. As indicated by Clean Technica, the organization has aligned with Mobileye to create frontline driver help innovations that would target purchasers' self-rule and will be designed for car capability norms, quality, cost, and scale. Regardless of its excessive securities exchange valuation, if Nio can continue its quicker-than-anticipated development, JP Morgan's $40 an offer value target could before long be in the rear-view mirror. We hope you enjoyed this video. If you did, please give it a thumbs up, subscribe, and click on the notification bell so you can get updates whenever we post a new video. Do you think that the Nio stock is worth your investment in 2021? Let us know in the comment section below. As always, thanks for watching.